welcome to the Market Alert for Monday, the 17th of June 2019. So, Friday, market stuck in limbo as traders brace for next week's fireworks. So, what are next week's fireworks, which of course is this week? Well, what the market's waiting for is this. I'll cover this now before we get into detail. The market's looking for a rate cut by the Fed to stimulate the market. However, the consensus at the moment is that Powell isn't going to give them one. So let's look at this in a bit more detail. But this is what they are looking at as far as this fireworks bit here. That's what they're hoping for. So let's move into the Dow. And this is the pound. Let's get the right chart. There we go. So this is the pre-market session on Friday. You can see all the way through after the market alert. The markets are not sticking to the pattern. It attempts to come back of moving higher, but finds the 200 bar average a bit of a resistance there. And then eventually we get the start of the session. We get the shakeout. We get the fight. It's all scrappy up to the 200 bar moving average. And again, you can see how powerful this is. And then eventually we break through before the close, 150 point move to the upside there. So the second part of the pattern is certainly played out, and partly in the pre-market session as well, of moving higher, but it did move lower to begin with. However, we just drag it across here and have a look and see what's going on from the open of Sunday night. You will see the market is higher. We had a bit of a pullback here, and then the market's just moved to the upside there, staying above the 50 bar moving average in the 20 until we get into the European trading session. There you see the market moving back a bit. So watch the market come down towards the 200 bar moving average and find support here, and then potentially move higher as well. And the reason I say this is because the only news today is Super Mario speaking at 6 p.m. There is no news whilst the markets are open, so this leaves the Dow free to move higher. The market's also pricing in this potential rate cut as well, and you can see this here as the market's attempting to move higher on fresh air in the hope that Powell is going to actually cut rates by 0.25%. If he does, we've got new all-time highs coming into this market, that's for sure. If we look at the weekly chart, we'll see this here. So that's what it will be aiming for this week if they get the rate cut. If they don't, well, it may be a different ball game altogether. So keep an eye on Wednesday evening, 7 p.m. Meanwhile, in the pound, this down on Friday as the UK continues to look for a new Prime Minister. A bit of an impact there on the market. No great selling, but the market trying to bounce off this level on the overnight here. We'll just draw this on there. So we're looking at 1255 is the level, also to get back above the 76% retracement on the downside there as well. If prices do move towards the upside, then watch out at this level here, 12713. You can see what happened last time when the market went and retraced. We had a double top there, and the market then retraced down to 76% and close to the double bottom there. But at the moment, in between the two. So again, if you're not trading it, keep an eye on these things all the time so that you remain familiar with what's going on. And over the weekend, if we grab this one, Bitcoin soars above 9k, and this time it's different. Apparently it's mostly institutions that are buying now. So let's have a look at the weekend. This is Friday. We can see the market moving higher off these trades. We had a short here that failed, and that's no doubt due in part to the fact that we are above the 200 bar moving average, which again is leading me down this route that what we can do is use, we can remove some of these sell side signals and hone this a lot better by adding in the other averages that we have in the Dow and the pound. And when the market retraces, either a 76% retracement or the averages, we can then get another buy to re-enter, because the the intraday chart is on the buy side, and you'll see what I mean when we look at the 4 hour in a moment. So here you can see overnight, early hours of Saturday, the market moving higher. Started out a bit quiet on Saturday morning, and again, there we go, and then again you can see the buy side is the winning side, and once again the market above the 200 bar moving average. So you can see how this is actually starting to formulate a potential trading strategy on the buy side. So yesterday, Sunday, a lot of activity for Sunday, and I was watching this at the time. We started off on the buy side, but having broken the psychological level of 9,000, the market is due for a correction. There's no doubts about that, because we're sort of 50% back. We're heading that way to the all-time high of 20,000. So the market has a shakeout, and this is to get rid of the weak longs. Take out the stops, which would have done no problem at all. I mean, you can see the market here from the high down to this low, $640, and the market moves down. You can see the buying coming back in now. This is just engineered, and then the market manages to move back, and now we have a situation where we've got from the high, whoops, wrong one, this is the one I want, from this high down to this low, you'll see the 76% here, and that isn't a bad area to actually short off for a quick profit. And then as you've already got the potential weakness here, so we see the market moving lower, and then if I just do this, and we go from this low to here, let me just take there we go, take the check mark out, and then from this low to here, you will see the market come back to 76%, and more importantly, the market sitting on the 200 bar moving average. So the market moved lower again, and now it's clear for the market to bounce back off these levels. So these are really good areas here to get to the buy side of the market. Wait for it to pull back. So from this high to this low, the market is likely to be at a 76% retracement at the moment. So we'll just drag this across. You can see how the market came back here, and at the moment also at this area as well, just trying to get above it. So it needs to take out the high over on the left, and then move higher if it's free to do so. Starting to get a lot of interest again now as it's making its way back. It wasn't just a bubble and then it's gone. I had to sit through nearly 18 months of the market doing nothing, but now we're back in business. And you can see here what I mean about the short side failing, because once the market gets back in a bull market above that 200 bar moving average, no matter what the time frame, you will then get the market moving to the upside. It's just a universal average that is used. You can see all the way going back to April here, and then the market continuing to the upside there in the daily chart as well. So there is a definite pattern here with this 200 bar moving average, and you can see how we can use this in order to catch a ride in this market. So fascinating stuff going on there. It's amazing how these things reveal themselves. On another note, Deutsche Bank, this putting in a new all-time low on, no, it isn't a new all-time low, it's a low of 674. We went down to 662 last week, and 682, and you can see that in the chart here. I think this is a new low. Let's just have a look. Yeah, there you go. There's the low I was thinking about. Just get rid of this. And the low here, 661.62. Yeah. So we've got a bit of a 62%, 50% retracement going on there. So watch the low over here in this market. If it's breached, then we could head down to that 640. Also, right, you can find the article, Deutsche Bank to launch 50 billion of bad bank housing, billions in toxic derivatives. The 2018 report, annual report, shareholders report from Deutsche Bank shows 43 trillion at the moment, or at that time I should say, not at the moment, of derivatives on its books as well. So it's certainly fascinating to keep an eye on this one at the moment, because of those huge numbers of derivatives that they have and how they're going to get out of this. So going forward through the summer, we could see some fireworks with this. And again, Charles Nenner's prediction of 640, I've got this lined up here. I don't know why he didn't expand upon it, but just out of curiosity, that's why I'm keeping an eye on this. But certainly a problem at Deutsche Bank, no doubts about that. And the implied volatility was 1381 on Thursday. Friday, you're going to see this reduce as the market is moving higher down to 1343, which is giving it room. If Powell doesn't increase interest rates and the market moves lower, gives it the opportunity to move back to the upside there if we get a big correction in the market. So that's the whistle stop tour this morning of what's been going on in the markets and the trades for Friday. So let's see what happens today. No news except for Barmy Carney out at 6 p.m. Let's see what he's got to say about the whole of Europe as well, which has got more problems financially than you can poke a stick at as well. But obviously that would be a distraction from the run-of-the-mill Brexit stuff that we're getting here. So there you go. That's it for this one. If there is anything to report, I will let you know. But otherwise, as ever, thanks for watching. See you in the next one.